Throughout all the craziness of the past couple of years, one great thing that has blossomed is consumers and companies alike rallying to be more socially responsible. This has led to a boom in sustainable investing, and the term ESG has been popping up everywhere, from investment platforms to boardrooms. But what exactly does it mean? And how can you take advantage of it? Hey, I'm Nikita, and I'm not a financial advisor, and this is not personalized financial advice. Look, guys, it's 2022. Companies aren't getting away with some of the sketchy things that they used to, and consumers want to invest in providers that care. And we're ready to put our money where our hearts are. 76% of consumers say they will stop buying from companies that mistreat their employees, environment, or communities. And to their credit, many providers are taking a good look at how they handle their people, their company, and the planet. ESG is a scoring system for those companies based on non-financial criteria. ESG stands for environmental, social, and governance, and helps measure the sustainability of an investment or company. So ESG will look at environmental things like emissions, deforestation, and energy. It will look at social factors like employee diversity, human rights, and data security. And it will factor in governance issues like internal corruption, lawsuits, and board diversity. After factoring in all these different elements, rating agencies such as MSCI assign the ESG score as a way of judging an investment's financial returns and its overall impact. Basically, a potential investment's ESG score measures the sustainability of the investment in those three specific categories. You may have also heard the terms socially responsible investing, SRI, or corporate social responsibility, CSR. And while they all take social responsibilities into consideration, they are each a little bit different. SRI is a general term for an investing strategy that aims to generate both social change and financial returns for an investor. This might include investing in a company that makes a positive sustainability impact, like a solar company, and completely excluding companies that are making a negative impact. CSR is a corporate strategy of companies to improve their public opinion by positively impacting their local community or environment. You may sometimes hear SRI, social investing, and ethical investing used sort of interchangeably, but none have the strict criteria that ESG has. The main benefit of ESG investments is pretty obvious. You'd be investing in companies that are dedicated to creating positive change. But aside from just feeling better about investing your money with a company that actually cares, there are a lot of other great benefits in sustainable investing. If you really think about the core of what ESG is, it sort of pushes companies to govern themselves better. They're treating their employees better, they're mitigating potential lawsuits and issues through improved processes, and they're minimizing their footprint on the planet. So by extension, these sorts of positive increases can lead to lower risks for their investors and lead to the potential of higher returns in the long run. In fact, several studies have shown that sustainable investments have yielded higher returns over time and consistently show a lower downside risk than traditional funds. Now, let's talk about the best part, which is how you can take advantage of ESG investing. Just remember, diversity in your investments is always important, even in sustainable investments. A couple of popular options are ESG stocks and ESG mutual funds, both of which can be bought and sold just as you would any other stock or mutual fund. But ESG does require a bit more research than traditional stocks and mutual funds because you'll want to check out a company's impact report or other criteria to make sure the company's initiatives align with your own personal values. Sifting through paperwork every year to figure out who is and who isn't fulfilling their forward-thinking promises can be a lot, but you have a couple of options for choosing ESG investments. You can either do it yourself, hire an ESG financial advisor, or get a robo-advisor. If you go the DIY route, you'll need to do a lot of your own research. Luckily, there are a ton of useful resources out there. Consider starting with a best of list published by a credible outlet that lists the current top ESG investments. This can be a good springboard into your research and help you choose solid ESG investments for your portfolio. Now, if the idea of tackling it alone feels overwhelming or confusing, or you just don't want to, you might want to consider an ESG financial advisor. They can help create a strategy for your financial goals while implementing your ESG investment goals. If you already have a financial advisor, they should be able to help with ESG investing. And your final option for choosing ESG investments is a robo-advisor. I like to think of these as sort of like a hybrid mix between a financial advisor and the DIY route. They're more economical than financial advisors, but pricier than doing it yourself. Robo-advisors are automated advisors that will build an investment strategy based on the criteria and goals you provide using artificial intelligence. The portfolio will be built based upon your risk tolerance and goals, and you can opt in or out of elements as you see fit. Once you decide how you want to invest, your next step would be to decide which companies align most closely to your own sustainability values, while still offering a solid investment opportunity. And then start building your portfolio. Ultimately, the goal is to have a well-balanced portfolio that makes sense for you and your goals. And where you decide to invest your money is your own personal decision. As of 2021, only about 21% of investors were investing in ESG, even though there were more than twice as many that were interested. The main reason they haven't taken the plunge is that they don't know enough about ESG. So hopefully this video helped you understand a little more so you can make informed decisions about what is best for you. The cool thing about ESG investing is that it offers a way for you to ensure your money goes to places that matter and can make a positive impact. If you want to ensure your money helps foster change and progress, ESG investing can help you do that. If you're feeling inspired to learn more about ESG, SRI, and all sorts of other fun acronyms, I'll drop some links to some NerdWallet resources down in the description below. And while you're down there, make sure you hit that like button and subscribe to our channel. See you next time.